Good morning from Bloomberg's European headquarters in London. I'm Danny Berger. Managed Cranny is off for the week. Welcome to Bloomberg Brief. Let's set your agenda. Global politicians on notice. President-elect Trump threatens to regain control of the Panama Canal. It's a deal. Nissan and Honda plan to merge to create the world's number 3 automaker. And in a year that's been upended, the bond bulls and the stock bears, markets enter their final stretch in a holiday-shortened week. And in this week, we were saved. We were saved by cooler PCE after the worst week for the S&P in over a month. Has the Fed gotten too negative on inflation? It is tech that leads the Fusion Sessions higher this morning, up about 0.5% for this bond market. Again, little changed. It is going to be light volume all this week. Light volume, which will be met with Treasury auctions. We're going to get $69 billion worth of 2-year notes on slate today. At one point, yields last week reaching the highest level since May. Your 10-year yield up 1.6 basis points, 4.53% is where we are. We are at least saved the drama of a government shutdown this week. Let's get some of the individual stocks we are keeping an eye on this morning. Nissan, as I mentioned, it is planning to merge with Honda under a holding company in 2026. So Nissan shares up more than 1.5% off the back of that. Plus, we're looking at both Palantir and Endural this morning. They are on talks to partner with rivals to form a consortium that would bid together for U.S. government work. Palantir up 1.1%. Meanwhile, Broadcom, that gets an upgrade to positive from stable by Fitch. They say that it reflects the company's strong financial profile. That is up 2.4%. And in just moments, we're going to be catching up with Aneeka Gupta of Wisdomtree and Iain Stealey of JPMorgan Asset Management. So much to talk about this morning, not least of which is just a calm market as we look ahead to 2025. And there's quite the range for where this bond market might go. The FT has a survey of the sell side. The average, they say, is 4.1% for the end of the year in 2025. So that is a rally. On the most bullish side is Morgan Stanley. They see 3.6%. Deutsche Bank, the most bearish among the banks, seeing 4.7%, saying that Trump policies will force more inflation, will force not as many cuts as we're expecting, and higher yields. Joining us now is Aneeka Gupta, Director of Macroeconomic Research at Wisdomtree. Aneeka, really great to see you this morning, especially in person. Look, at the end of 2024, where we're at this point a year ago, 23 rather. I mean, we got the bond market wrong, I think is fair to say. What are you thinking about the outlook for where this Treasury market goes, for where 10-year yields might end the year?
Yeah, I think I would side on higher inflation, bond yields moving higher. Our expectation is for it to reach 4.9% by 2025, and that's largely predicated on the results of the U.S. election. Trump's America First policies are going to drive inflation higher with the tariff wars ongoing. In addition, his focus on lower regulation, higher M&A, all of these factors, and obviously the more expansionary fiscal stimulus is likely to, lead to that tailwind for inflation and lead to higher yields.
4.9% is definitely something this market doesn't feel like it's prepared for. How does that contrast with the risk-on rally we've seen everywhere, with the enthusiasm of what Trump policies would mean for risk? Are those higher yields enough to upend that?
So I think, Danny, since the election took place, we've seen a very good Trump being priced in, where the fear of these trade wars have been dialed down. The expectation of a more pro-U.S. stance has been priced in. If you see off late over the last few weeks, we have seen a bit of a correction. Investors are now trying to gauge where his policies are likely to be headed. And we can clearly see that what he's open to is a negotiation. So any country that's willing to negotiate on his deals are likely to benefit. But those countries that are not willing to negotiate, they are going to have a lot of tension. And there is going to be a lot of, trade friction going on, which is likely to be factored into equity markets. So there will be a lot of volatility moving into 2025.
What do you make of the argument, though? This thing, personnel is policy. We learned over the weekend he's nominating Stephen Marin to be the chair of the Council of Economic Advisors, someone that has a rich financial background. We got Scott Bessent. We got the good picks, and a lot of investors have taken comfort in that. Why don't you?
Well, we definitely take comfort in the fact that we have a pro-growth mode for the U.S., but what we don't take comfort in is the uncertainty that lies ahead, the uncertainty of his relationship with China, the uncertainty of the trade frictions with Europe, where Europe is already facing such a difficult situation, the unlikelihood of how trade could pan out with Japan. All of these factors do keep a lot of uncertainty remaining for markets in 2025.
What does that mean for cuts, the Fed's dots of 2 cuts in 2025? Could we be talking about hikes in this scenario?
I would definitely rule out the possibility of hikes, but I would definitely move in line with the Fed's dot plots of only 2 rate cuts. And that's quite a take back for the market, because they were previously anticipating about 4, and now that's been priced down to just about 2. So that is another headwind that will be facing equity markets, moving into 2025.
We're just thinking about some of these frictions. Even if it is a pro-growth policy, we're already in a place where labor markets are starting to cool. You could argue just how much they're cooling. The idea of a strong dollar hurting exports. We know home builders are struggling. That seems to portend a growth scare, or at least is a growth scare underpriced by this market for next year.
Yes, that is one side of the argument. But then the other side of the argument is you have financials that are likely to benefit because yields are going to remain higher. You also have less regulation. So financials as well as industrials are likely to benefit. The tech sector is also likely to benefit from that lower pressured regulatory environment. In addition, obviously, Trump is going to try to negotiate the best deal for the U.S. So that, again, benefits, U.S. stocks and U.S. equities. But for me, the most important will be, trying to gauge the best valuation play for 2025. And I think this is where valuations will matter, because obviously on one end of the spectrum, you've got the overpriced, overvalued technology stocks. And at the other end of the spectrum, we have the small caps and the value segment of the market that seems very, very underpriced. And that segment of the market does have an opportunity moving into 2025. We do see that broadening of the rally likely to take place, as we get that pro-growth stance in the U.S.
You've been writing a lot about Japan after last week's decision. And one of the more interesting things I think you wrote, Aneeka, was this idea that the BOJ isn't controlling the yen right now. And you could say that of a lot of central banks. Yes. Brazil, for example, trying to hike to make sure they have a strong real. The SNB cutting by 50 basis points to fight some of the strength in the Swiss franc. What does that mean for global policy in 2025 when it's not just the dollar, it's not just the Fed, but it is now politics that is really asserting itself as the driver?
Absolutely. We're going to see a very big divergence in policy. We're already seeing it playing out in the U.S. We're seeing a sharp divergence with Europe, which is likely to go ahead with quite a few rate cuts. In comparison, Japan, on the other end of the spectrum, is likely to hike, and they avoided this recent rate hike in support of further growth. They want to see that growth coming back because its growth trajectory has been very, very volatile. And, that also opens an opportunity of how investors play currencies and, equity markets, because they do open up tremendous amount of valuation gaps as well.
Aneeka, really great to catch up with you. Enjoy the rest of your week and your holidays. Again, wonderful to see you in person. That is Aneeka Gupta of Wisdomtree. Okay, let's get now to some other stories that are trending on the terminal this morning. Nissan and Honda, they are agreeing to start talks to merge under a holding company. They say they plan to list it in August of 2026. Both the CEOs of the companies spoke about the future earlier this morning.
In order to work together, we need to benefit from the huge synergies. Otherwise, it wouldn't be meaningful in the eyes of the stakeholders. So that is why we agreed to start the discussion.
Once the definitive agreement is concluded, the holding company will be incorporated and be listed on the prime market of the Tokyo Stock Exchange, subject to obtaining necessary approvals from relevant authorities in resolution at each company's general meeting of the shareholders. The visibility of the timing is August 2026.
Chinese automakers' share of Europe's EV market dropped to 7.4% in November. That's the lowest since March. Over that period, new tariffs added as much as 35% to the cost of importing cars to the region. An EU investigation had concluded that state aid provided China's EV industry with an unfair advantage. Elon Musk has said that the Fed is, quote, absurdly overstaffed. Musk was responding to an ex-post by Chamath Palihapitiya, where the Social Capital co-founder described last week's Fed decision, detailing Powell's language about policy entering a new phase and the ensuing equity market sell-off. Okay, coming up, Panama's president rejects Donald Trump's threat over control of its canal. We're going to have the details for you coming up on your Bloomberg Brief on this Monday morning.
The fees being charged by Panama are ridiculous, highly unfair, especially knowing the extraordinary generosity that has been bestowed to Panama, I say very foolishly, by the United States. This complete ripoff of our country will immediately stop. It's going to stop.
Every square meter of the Panama Canal and its surroundings belongs to Panama and will continue to be. The sovereignty and the independence of our country are non-negotiable.
Panama's president responding against President-elect Trump's threat to reimpose U.S. control over the Panama Canal. After the response, Trump posted on Truth Social, writing, quote, "We'll see about that." Joining us now is Bloomberg's Bill Ferries. Bill, it speaks to a lot about the moment we're in, that Trump isn't even president yet, and he's upending global politics, not just in the big countries, but in Panama. I mean, Trump talking about the U.S. reasserting control of the Panama Canal would have a lot of people scratching their heads. What do we make of it?
Yeah, I mean, the treaty that ended U.S. control of the Panama Canal is almost 50 years old now. So Donald Trump is really stretching back in time to pick up this kind of a fight. I think what it tells us, though, and what it tells other governments and world leaders, is that no matter what your relationship is with the U.S., whether you think you're on good terms or whether you're a rival like China, there's going to be a lot of turbulence coming your way, and you should have a plan B. We've seen countries like China already moving to limit exports of some critical minerals, for instance, to the United States so that they have leverage when trade talks presumably begin. We've seen similar things happening in Europe and even in Canada, where Prime Minister Justin Trudeau quickly flew down to Mar-a-Lago to talk about border security with Trump when he threatened 25% tariffs. So I think regardless of the relationship a country has with the U.S., things are going to change under Donald Trump, and it's going to be even on issues that you were never expecting.
How much does China play into this? Because part of what Trump was talking about was China's influence in the Panama Canal. Is this also on notice for all the countries that have very large Chinese presence, be it through debt, be it through other investments, that they might get the wrath of a president-elect Donald Trump?
Yeah, I think he's going to be looking closely at the relationship different countries have with China. In this case, the Panamanian president is right. The Panama Canal is basically a politically neutral asset that largely benefits the United States, but really benefits global trade. There are Chinese companies that help manage a couple of the ports along the canal, but it is open to transit to ships of all nations. There have been fee increases along the canal, and that may be what is really getting after President-elect Trump right now. But, he does look at, he's going to fixate on relationships with China. We also know from his first term that he looks at things like trade balances. Who does the U.S. have trade deficits with? Inevitably, in his first term, those countries came under scrutiny.
We also had Trump talking about not just Panama, but Elon Musk, saying it was a hoax, the idea that he would take over the presidency. But the fact that Trump is even talking about this, we had conversations on this show, this idea that one of the risks for Tesla, for example, would be that Trump tires of Elon Musk. Is there a sign here, if he's talking about this, he's aware of the conversations of Musk's influence, that there is some friction between these two?
I mean, there are obviously two men with very big egos and quite a bit of global influence. They've been spending an awful lot of time together, even before the election. and then particularly after the election down at Mar-a-Lago. They did not get along very well in Donald Trump's first term as president. Elon Musk famously quit one of these CEO advisory boards that he had been named to. So I think it's fair to ask how long the relationship lasts, who is having the most influence on that. I think last week when we saw when the U.S. was headed towards this potential government shutdown, Elon Musk was really the one who came out against that initial deal, the bipartisan deal, and then you saw Donald Trump and Vice President-elect J.D. Vance putting out a statement. So I think that just leaves a lot of people wondering how long this relationship can possibly last.
Bill, just quickly here, we also have the new Trump for the head council of economic advisors, Stephen Miran. What do we know about him? What does this signify about those who are going to be leading economic policy under Trump?
Well, Miran was a deputy official in Trump's first term at the Treasury Department. I think most interestingly, going forward, he was a co-author of a paper that basically accused the Treasury Department and Janet Yellen of kind of manipulating how they went about T-bill and bond sales recently over the last year to try to supposedly try to goose the economy to benefit Joe Biden. That's a report that was kind of rejected by both Treasury and a lot of more mainstream economists. But it does show that, there's going to be a lot of questioning about how the Treasury goes about its sales and what Trump may take an interest in when it comes to things like the deficit and even the Federal Reserve, I think, going forward.
Yeah, I know there was a lot of excitement around Miran that he is a strong voice to enter the Economic Council. Bill, thank you so much. Bloomberg's Bill Ferries. Coming up, drug maker Novo Nordisk stages a partial recovery, but that was after its biggest slump in more than 2 decades on Friday. More on that next. This is Bloomberg. Welcome back to your Bloomberg Brief. I'm Danny Berger in London this morning. Time now for your front page news. Let's give you a look at what's making headlines around the world. First up, Bloomberg has this, that Prime Minister Benjamin Netanyahu said Israel will act forcefully against the Houthis. Over the weekend, a missile fired from Yemen struck Tel Aviv. He called on Israeli citizens to be patient, saying that it may take time. Next up on the Wall Street Journal, they're reporting on the White House's behind-the-scenes efforts to calm the drone frenzy. Biden called the Pentagon 4 times seeking information and was told the military had found nothing unusual. He had finally spoken out about it on December 17th, suggesting it was a non-event spurred by rumors and misinformation. And the AP leads with France unable to announce a new government before this evening. That's because of a day of mourning for the victims of a cyclone disaster in the Indian Ocean, the lead said. Francois Bayrou, who was appointed prime minister, is aiming to name a new government by Christmas. And we're also keeping an eye on Novo Nordisk. Shares are moving higher this morning, but that came after Friday's session, where it fell the most on record. Novo's experimental obesity shot, CagriSema, helped patients lose an average of 20.4% of their weight over 68 weeks. That is short of the 25% weight loss the Danish drug maker had repeatedly predicted. Novo is Europe's biggest company by market cap, and all of this means that it's set to end the year deep into the red, down more than 8.5%. Joining us now is Sanne Voss in Copenhagen. Sanne, the numbers are astounding. $120 billion, what was wiped off of Novo Nordisk's market cap on Friday. Is this darling of the equity market? Is it losing its shine?
I mean, that's probably still too early to say. We did see the share recover a little bit on Friday and is up again on Monday. But there's no doubt that there has been very high expectations for Novo Nordisk, almost too high. And Novo is feeling that now. The company was really, it's really counting on this new drug, CagriSema, to position it as a leader in the market, the massive market for weight loss drugs. And the trial results on Friday, well, they disappointed investors, and that is why we saw a major sell-off on Friday. And the problem for Novo was that it had promised too much. It had been out saying ahead of the trial that it could deliver a 25% weight loss, and it fell short of that. It had just been too confident.
It has a lot of competition at this moment, and especially in this new area of having a weight loss shot and having different various obesity drugs, because so many more people are on the scene. So what does it mean for CagriSema? Again, 20%, most people would look at that and say that's a good result. What does it mean for them to have disappointed?
Yeah, I mean, Novo Nordisk is still, they say they're encouraged by the results and they still intend to launch it on the market in 2026. And we are still waiting for more details about the trial that will be crucial in kind of assessing the effectiveness of this drug. For example, Novo allowed its patients to, if they wanted to remain on a lower dose of CagriSema rather than stepping up to the high dose. And a lot of patients did that. So the big question mark now is, why did they do that? Is that because of side effects, in which case that's obviously not good news for Novo? But it could also be that they were simply just happy with a slower weight loss, and then that's a much more positive story. So we'll know more details about that probably next year.
Sana, appreciate it. Sana Voss in Copenhagen on the latest on Novo. Coming up, we're going to catch up with JPMorgan's Iain Stealey as he looks outside the U.S. for duration. He's going to join us on the show next with a quiet equity and bond market in this holiday shortened and light week. Your equity future session up 0.2%. This is Bloomberg. Welcome to your Bloomberg Brief. Danny Berger here in London. Let's set your agenda. Global politicians on notice. President-elect Trump threatens to regain control of the Panama Canal. It's a deal Nissan and Honda plan to merge to create the world's #3 automaker. And in a year that's upended the bond bulls and the stock bears, markets enter their final stretch in a holiday-shortened week. And it's pretty calm with volumes pretty low. Equity futures are rebounding, save for the Russell 2000, which is flat. That's after a good day on Friday, after a week that had its biggest decline in about a month after a more hawkish Fed. NASDAQ 100 futures lead the push higher, up 0.4%. For this bond market, little change this morning. At one point last week, yields had reached the highest level since May. We were spared the drama of a government shutdown, but we will get auctions this week, including $69 billion of 2-year notes. Pressure on duration this morning, 10-year yields and 30-year yields up more than 1 basis point. On that point about duration, JPMorgan's Iain Stealey looks ahead to next year, writing this. With uncertainty around the outlook for 2025 undoubtedly elevated, we prefer to stay closer to home on U.S. duration and look elsewhere. We prefer government duration in Europe and Australia relative to the U.S. Pleased to say that Iain joins us now. He is International CIO of Fixed Income at JPMorgan Asset Management. Iain, wonderful to see you. And I think you approached us with a lot of humility. We were talking about this in the break, that everybody's call at this time last year just was completely wrong. So in that uncertainty, what do you grab onto? What is your protection in this time in this bond market?
But I think you still, as you pointed out at the beginning, there's opportunities in the bond market. The yields are, I think attractive. If you look at yields relative to where they've been over the last couple of decades, we're still very high on the core side. Yes, it's a bit more challenged in the US, given we just don't know what's going to happen with the Trump administration and with the policies that are going to go forward. But duration is available outside of the US. You know, we saw the UK GDP data this morning going nowhere. We've seen the Eurozone obviously struggling. The RBA seems to have changed their tone a little bit. And then just the all-in yield, it does offer you that protection if things go wrong. We saw it in August, 6% decline in stocks, and suddenly the US Ag's up 1.5% because bonds doing what they should be, providing that diversification. So I don't think it's all doom and gloom for the bond market.
Is there anything that would make you more bullish on US duration, that would make it more attractive?
I think if you started to see the employment picture continue to, or saw that softening continue, I also think what we heard from Jerome Powell and the press conference and the statement last week was that inflation is back on the agenda. Obviously, PCE on Friday was a little bit more helpful for that narrative. I think if you started to see inflation come down again, there's still the two drivers, growth and inflation. If they start to soften off before you get these fiscal policies come through, then the Fed can go further. I think what they're saying at the moment is they've done a lot. They've done 100 basis points. Let's just see if that is the recalibration the economy needs, or if they need to go more, they will do.
You make it sound so simple, Iain, and I love that. But there have been complaints that the Fed is making it maybe needlessly complicated. This argument in particular comes from Mohamed El-Erian. He had an FT op-ed this morning that he wrote. I just want to read this one portion to you and get your thoughts on it. He wrote that market participants were right to feel uncomfortable listening to Wednesday's press conference. In addition to speculating on the significance of the Fed's latest flip-flop, they should also embrace a more basic reality. The continuation of the central bank's excessive data dependence increases uncertainties in the U.S. Again, saying that they've gone back to data hyper-dependence, and that's a bad thing for the economy and market participants. Just what do you make of that? Your first reaction?
I think the issue that we've got, you're absolutely right. So it does feel like they would like to be dependent on all the data looking forward. They seem to be dependent very much on sort of data by data and what's actually coming through. I think they are actually in a tough position at the moment. They don't know what's going to happen next year. They don't know the sequencing. They don't know the actual events. They don't know the impact it's going to have on the economy. And actually, the data's done a bit better than they thought it was going to. And if you look at just the forecast for 2024, they've had to revise up growth. They've had to revise up inflation. It's calling into question like, how much further they need to go. And they have addressed that to some extent. I think the questions will be asked is, did they have to go as far as they've gone? But they think they're restrictive. They still think they're in restrictive territory. There was a bit of a flip-flop around the communication about taking down from very restrictive levels or a lot less restrictive and then still meaningfully restrictive. So let's see how they are. I just think there's a lot of uncertainty as we move into next year.
Well, I was going to say, it seemed like this very two-sided Powell of having to explain why disinflation is remaining on track, but why they're not going to be cutting as much, about why the jobs market isn't a source of inflation, but why it's also strong. It is really this two-sided risk that the Fed is dealing with. And with all of that, it's that Powell saying that they're in a new phase. What did you make of that? What is the new phase for the Fed?
Well, the new phase is they've done this recalibration. They've taken rates down by 100. They believe they were very restrictive. They've now got it down to, let's say, the top end of what maybe neutral is. I mean, again, no one really knows what neutral is. It's probably a little bit higher than what the Fed's predicting. Are we there now? And then what happens next year? Do we just get policies that are stimulus to the economy, and the economy seems to be doing fine? Do we get policies that are inflationary? Does the Fed have to kind of call into question whether it continues to go? So I think what we've heard from Powell and then speakers since is that we're just going to have to take our time. We're going to have to see how the data plays out and then what the administration puts into play. And for me, that means pausing in January at the meeting, and then you're talking March time, and maybe a bit more of an understanding of what's going to happen.
The volatility we see around that, does that mean that duration needs to have a higher term premium just because of that volatility that, again, sort of the band that we're oscillating in, as you write, it gets wider? Does that mean that you should be demanding more yield in the longer end? Is that kind of one of the reasons why we've seen duration do what it has over the past few months?
I think we have seen the curve steepen back up, and I think people are now kind of demanding a little bit more premium. So term premium has increased, still probably not to the levels that some people would like it to see. But I think that all-in yield argument comes back. We're talking 4.5%. That is a reasonably high all-in yield, particularly if inflation is moving down and maybe it's not hitting 2%. But even if you're talking 2.5% to 3%, you're still getting really attractive real yields. And I always think that benefit of fixed income is not just the yield, it's that diversification, it's the ability to get capital gains if things go wrong. I still think that's really important, and treasuries are still the flight to quality bond market.
I have to say, though, Iain, reinvestment risk was talked about so much in 2024 that the cutting cycle is coming and you need to get further out on the curve because you're going to miss when a rally happens in this bond market and yields finally do come down. But the Fed has been cutting and yields have moved higher by something like 80 basis points. It's the biggest move higher in 10-year yields over 3 months since the cutting cycle began. What does that do to client sentiment, to saying you should be in a bond market, but the Fed has been cutting and bonds haven't been cooperating as you'd expect them to?
Yeah, I think that's a challenge as well, because if you think about it, at the beginning of this year, we were at seven cuts or so, and then I think we were in April, and there was debate as to should we be hiking again. Then we're back at six cuts late July, in August, and as we were thinking about that, and then obviously since they did cut the sort of the oversized 50, we've had that rebound. The data's just got a bit better. So this is what the Fed's dealing with. It's dealing with a very volatile market pricing on top of what they're actually trying to forecast and predict. So I do think that does create a challenge. The good news is, though, if you look at where cash rates are, the 10-year yield is above cash rates. First time we've seen that in a couple of years. So suddenly the argument of moving out of cash into bonds, which a lot of people were challenged with because they were effectively, at least if you were moving into government space, you were giving up yield. That's not the case anymore. And then if you put on some credit spread and you can build up a portfolio of high quality bonds, well north of 5%, even pushing towards 6%, that's a reasonable pickup relative to cash these days. So I still think that argument of locking those yields in is probably even more powerful today than it was earlier this year.
We need some good news. You're talking about volatility for 2025, reminding us how crazy 2024 was. So I hope we get some bit of calm for 2025. Iain, thank you so much for joining. Really great to see you. Enjoy your holidays. That is Iain Stealey of JPMorgan Asset Management. Coming up on the show, Honda and Nissan take their first steps towards a historic merger. We're going to bring you the details on your brief coming up. Nissan and Honda have agreed to start talks to merge under a holding company, which they plan to list in August 2026. Both CEOs spoke about the future earlier today.
In order to work together, we need to benefit from the huge synergies. Otherwise, it wouldn't be meaningful in the eyes of the stakeholders. So that is why we agreed to start the discussion.
Once the definitive agreement is concluded, the holding company will be incorporated and be listed on the prime market of the Tokyo Stock Exchange, subject to obtaining necessary approvals from relevant authorities in resolution at each company's general meeting of the shareholders. The visibility of the timing is August 2026.
Bloomberg Global Autos editor Craig Trudell joins me now. Craig, great to see you. So maybe some big questions going into this press conference. What did we get answers to? What is still unknown about this merger?
Yeah, this really sort of started, coming together last week, or at least, to the point where it started to get reported, and it was really unclear what exactly the plan was. Were they just going to try and do a small sort of cross-shareholding together, which we've seen, across Japan for many years? Would they try and just do more of a Renault-Nissan style alliance where, they don't necessarily fully come together but work together on joint projects? This idea of a holding company seems much more dramatic in terms of, one listed company instead of two. One in which Honda will have the upper hand for the obvious reasons of them being, worth, after all, about 3 times more than Nissan is at this point. This really looks like a Honda rescue of Nissan as opposed to a merger.
But as you kind of hinted there have been instances where giant car companies try to come together and it doesn't work, whether it's Nissan and Renault or Daimler and Chrysler. Mm-hmm. Can it work this time?
I think it's really going to be tricky here because we had Carlos Ghosn on BTV just last week that I would encourage viewers to go back and take a look at that, where he talked about this idea that these two companies operate in a lot of the same markets. They do have some strengths, to give them some credit, but they have some sort of common weaknesses. I think they're both really behind in terms of the transition to fully electric vehicles. There's definitely some, strengths in terms of hybrids, which is not for nothing. But this is also an issue of Nissan really being just in a really sort of challenged state. And so my question here is sort of what's in it for Honda, right? And, I do think that may be, in the end, something that's difficult for them to sort of make a case to their shareholders that this is in their best interest. You look around the world, and it's a challenged state for a lot of car makers. VW, Europe's auto industry in general, but VW also has this added layer of labor disputes. They reached a deal over the weekend. What was it? What does it look like now? Yeah, so this was a case of management making the case for months now that they really needed to make massive changes to their operations in Germany, that they maybe needed to even close 3 plants, which really would have been unprecedented. Unfortunately, I guess if you would ask some shareholders and analysts, they weren't able to set that precedent. And so we instead got yet another can kicked down the road moment for them, where they did manage to make some sort of technical reductions in capacity, but plants are not closing. There's real questions about how many job cuts are really going to be just a matter of workers that were going to retiring in the next few years. So I think, the likelihood that we end up continuing to talk about VW needing to make more structural changes really drags on into 2025.
Yeah, again, all these car makers, lots of big changes to come as they compete with China. Craig, thank you so much. Bloomberg's Craig Trudell. To politics now. Panama's president has rejected U.S. President-elect Trump's threat to reimpose U.S. control over the Panama Canal.
The fees being charged by Panama are ridiculous, highly unfair, especially knowing the extraordinary generosity that has been bestowed to Panama, I say very foolishly, by the United States. This complete ripoff of our country will immediately stop. It's going to stop.
Every square meter of the Panama Canal and its surroundings belongs to Panama and will continue to be. The sovereignty and the independence of our country are non-negotiable.
Let's get over to Bloomberg's Mike Shepard, who joins us now from Washington. Shep, the fact Trump is even talking about the Panama Canal, he's talking about it in some force, and he's not even president yet. Why are we having this conversation? What does it tell us about Trump's approach to foreign policy? Again, something that some people would say is kind of a niche issue to bring up forcefully in front of a large audience.
Niche issue is one way to put it. It wasn't really on anybody's bingo card heading into the holiday weekend. It's unclear what set Trump off to make him fixate on the Panama Canal this weekend. First, in a Truth Social post on his social media network, and then at this appearance yesterday in Phoenix. But something does have his attention about it, and he is focusing on the rates charged there, and he's also insinuated the possible growing role of China, which operates and owns 2 ports near the canal. But the canal, under a long negotiated treaty with the United States, after the U.S. has ceded control of the passageway to the government of Panama, there's really no legal pathway for the U.S. to, in any way, shape, or form, take it back, as Trump has hinted at. But the Trump playbook is this, really, that he will confront an ally or an adversary with some claim like the one we are seeing made, and then he will put that individual leader or that nation in a position where they have to negotiate something with him. And in this case, Trump could also wield the tariffs threat. It's something he has already waved against the largest U.S. trading partners, Mexico, Canada, and China. And perhaps it could be invoked here, too, to try to get something out of the government of President Jose Molino, who is rejecting any threat to his country's sovereignty there. But it could be an opening to perhaps getting some rates lowered and allowing Trump to declare victory as soon as he takes office. It's a playbook we've seen him use with leaders in Europe as well when it comes to Ukraine. And he even yesterday, during his remarks in Phoenix, said that he had heard that President Vladimir Putin of Russia was willing to meet with him and eager to meet with him soon. So he is really trying to set the agenda even before he takes office.
It's a reminder of the volatility of the first Trump presidency. And we also got that in what happened over the past 4 days, the threat of a government shutdown led by efforts of Trump and Elon Musk. Even though it was resolved, Shep, is it a moment to retake stock, to say he's not even president yet, there is volatility, and maybe some of the good stuff that this market is pricing in, the various priorities, are going to be a harder and a more bumpy road to accomplish?
Well, I'm glad you brought it up that way, Danny, because there is really a connection with all of this and the way that Wall Street and a lot of others in the business community have viewed the incoming administration. Right after the election, there was a lot of hope among investors and business people and corporate leaders that maybe this time around Trump would be a little bit more nuanced, a little bit easier to work with, and that maybe some of the harder edges from the first time around have worn off. But we're seeing again, the elbows up approach. We're seeing again that he is not afraid to really push the envelope in dealing with foreign leaders and perhaps business leaders as well, as we may find out. So this is something that we have to take into account as he is preparing to take office in a month, that a lot of these threats when it comes to the border and promises on tariffs and other things, they may come to pass as he is framing them, and it will fall to his administration to try to defend them with some of the economic interests out there that could be hurt. For instance, we know that tariffs will have, based on economic research, a negative effect on businesses and consumers here in the U.S., and how that effect is felt will depend on the scope of those tariffs. So we'll have to see what happens there.
Shep, really great to get your thoughts this morning. Bloomberg's Mike Shepard there. Thanks for getting up early for us. We're also keeping our eye on Amazon today. This week, warehouse workers in New York City are expanding union strikes, demanding higher pay. Teamsters posted on X, quote, on the roads, in the warehouses, in the air hubs. The Teamsters Union will organize every Amazon worker and ensure workers at one of the world's richest companies finally get paid what they deserve. Joining us now is Bloomberg's Clara Hernandez Lizarraga. Clara, it's not just New York, it's Atlanta, it's San Francisco. What does this mean for Amazon in the middle of the holiday period when everyone's rushing to get their last-minute gifts?
Yeah, well, workers know the Christmas season is a critical time for Amazon, and they've timed their action to generate maximum attention just as shoppers are making their final Christmas purchases. The workers went on strike in a handful of U.S. cities in an attempt to force the company into the negotiating table to sign a better contract with the union. So far, more than 7 delivery stations have been targeted with walkouts and picketing since Thursday. And things seem to have been escalating with, as you said, workers at the company's sole unionized warehouse in New York, Staten Island, joining the strike on Saturday night. The labor union, the Teamsters, also has said that workers in San Bernardino, the cargo hub, were also joining the strike on Saturday.
And it's not just Amazon that's having a holiday strikes. It's Starbucks, too. Denver, Pittsburgh, Columbus, Ohio, joining in with Chicago, Los Angeles, and Seattle. Starbucks has seemed to say that it's a small disruption, but Starbucks has already been struggling, this company in general, having to bring a new CEO in earlier this year. What does their strategy look like with these various unions, and what does it mean for them?
Well, the strikes in the case of Starbucks fell through while negotiations were ongoing, and the unions say that the company has failed to honor a commitment to reach an agreement by year end. So far, nearly 50 stores have been shut, but things could expand because the strikes are expected to last until Christmas Eve. And yeah, we've seen new cities join today in Boston, Dallas, and Portland are expected to join today.
Clara, thank you. That is Bloomberg's Clara Hernandez Lizarraga. Coming up, we'll set you up for your holiday shortened week ahead on Bloomberg Brief. Let's get you set up for your trading week today. We're going to get U.S. new home sales and consumer confidence. That will come at 10 a.m. Eastern. On Tuesday, both equity and bond markets will be closing early ahead of the holiday. And then on Wednesday, you get your much-deserved break. Markets will indeed be closed for Christmas Day. In the meantime, with light volumes, we are looking at yields moving higher. At 1 point, yields last week hitting their highest since May, up 1 basis point. That is it for your brief surveillance. We'll take it from here.